I'm streaming, my man. Yeah, I'm streaming. I also can't see Lee. I don't know why. Now I see you. Hey, who is that, Heath? Can you please can you go out first of all, and can you close the door to the room? It messes up the audio. Close the door to my bedroom. Tell nobody to come in until I'm done.
Oh, it's here besides me.
Okay, then that means you.
Who's gonna come in?
Yeah, you can sit there quietly if you like.
I'm going downstairs, but no one's gonna come in.
Okay.
Starting?
Yes, I'm starting as soon as Kent and Lee are ready to go.
Are they on the phone?
They're on Zoom. I don't hear you anymore.
Yeah, that's because you're supposed to.
Oh wait! Don't touch it.
You're supposed to raise up the
Heath,
phone.
don't touch these things. Jesus.
What do you mean?
Why can't I hear you? Does this crap?
That's good.
Heath, please stop touching things. Get out. Get out. No, you can't touch things. You're messing it up. Can't hear you again. It's cutting out of. Oh, it's my headset that's cutting off. Oh God. I'll charge them right now, but why is that happening? These ones are charged. I mean, it says they're charged. I think. I don't know why. Let me get these out of the room. Hold on. I hear you. Yes, I'd like to hear more about the little baby and how Julie's handling it. Are you still are you still in the same apartment? You're making that work? All right. You're a lot more relaxed than I am. I hear you. You're just a lot more relaxed than I am. I mean, I would like have to figure that out. I don't know. I just feel like I need to like get things off my checklist. It's like it would bother me. Yeah, that's what my team of therapists keeps telling me. It doesn't work. No, it's just cats. You know cats? I do. He's my guru. Trading the a performance coach, but trading in the back half of the year definitely isn't the same as it was in the beginning half of the year. I'm doing a annual review right now, and like probably 5% of like the big trades were before April. Yeah. Yeah, but it doesn't matter for you because that's what you are. You're a little bit more of a volatile guy. I think you're probably doing fine, and it's just been a stretch of not the greatest trading environment for a while for everybody. By the way, for everybody I talk to, everybody I can confirm is not crushing it. Well, one of the nice things about no, just one of the nice things that has come out of like doing these videos is I talk to a lot of people. I've done like two more videos since and I just get like an opportunity to talk to people from all over the place. I'm sorry by the way you're not going to be able to come to dinner. I'm going to have to do the next one. I'm definitely going to take you. But I want to make sure I get the guys from Florida cuz Beardsley and Parker are going to be up here. Yeah, I know, but once in a while you can. But I get a chance to talk to all like these traders from across the firm, like even Chicago and Florida and everything. And the second half has been tough for just about everybody. I mean, tough is a relative term, right? But I don't think you know. Don't worry, I'm gonna make. I did because you told me to, but I'm gonna make a joke about it anyway. I can, Kent. It's gonna look silly either way because I have more hair. So why don't I can change if you want. What's up, bro? Sure. Nope, my wife said it's fine, and I never cared to begin with. Yeah. We're gonna what? Oh, you're ready to go. Is that what he said? Okay. I am. I'm recording. Are you ready to go, Lee? Okay. So let's go straight to some trades. But before we do, I just wanted to call out that if things look a little weird right now, your eyes are not deceiving you. We are reshooting the first trade we're going to discuss because the audio got a little mixed up. And since then, it's been a few months. Leah's actually had a new baby. So I wanted to wish you a Mazal Tov, who's actually sleeping in the other room right now. And really thank you again for doing this. If you have a few extra gray hairs, you haven't slept in a few months, it's understandable. So I really appreciate it. But we really appreciate it, and we're sorry for the technical issue. So let's talk about, we're going to talk about Meta from February 1st, 2023. Go ahead. You talk through, and I'll jump in with some questions. Whose camera froze? Mine or his? De Niro never has to deal with anything like this. This is unbelievable. What's the deal? Do we know why it froze? The app froze. Okay. Okay. In other news, um, Tal was over at my house the other day. He's doing a spoof video for the holiday party. You good again? Yeah, he was doing this like this spoof video. It was really funny, but he used the KB guys were like doing the whole like production of it, and he's such a diva. Like I've probably recorded, I don't know, 15 20 hours of podcasting so far. I've never so much as redone a line, and like first sentence he's like, no, that's no good, we got to retake that again, we got to do it over, like, and then like that went on the entire time. He was like, so it was it was, it was funny though. It was very funny. I got to laugh. No, it didn't. So I have a lot of questions about this that I'm going to ask you, but I just wanted to. I think this is like such a good. This is such a good trade for you to bring up that we're going to get to go over because having sat, next to you and near you and know your trading as well as I do, if I were to sum up your trading in one picture, it would be the chart of this earning stock. This is what you do. This is why you're as good as you are. It's because the whole firm is looking for first move and that quick money. And then while everybody else is, diving and out at the bar, and you're sitting there watching this trade develop and getting size into what's a huge second move. This is what you're really, really good at. This kind of patience and seeing the big picture. And I'm so glad to talk about this because this is really like your bread and butter. This is what separates you as a trader. So specific questions, but just for the benefit of somebody who might be watching this video in the very distant future and didn't see, somebody who might start 3 years from now, for example, and didn't really know what happened in Facebook 2 quarters before this, the market and every analyst kind of thought that Zuckerberg had lost his mind because Meta is, at the end of the day, it's a controlled company. It's King Zuckerberg, and he has voting control, and he decided to spend just an absolute unthinkable amount of money on the metaverse, which is losing money. And so the reason that's important was because in a lot of times when you see an earnings trade, you'll do your prep work, you'll look at the earnings sheets, you'll have an idea of the numbers you're looking for that first move or whatever. But that really wasn't the case here. The case was not so much that they beat or they missed. The case was really the story. Like there's a fundamental question of whether or not Zuckerberg's lost it, right? Like that, would you agree with that? Like that's the story here. Yeah. Crazy. I think I'm gonna have to fact check this, but I think it came out to something like 90 billion over like 5 years or something like that. Just like an absolute like insane number that like nobody would ever like spend on an experiment, right? Like that it was just an insane sum of money, and so basically the story changed. And why is that important? It's because it's like what you said. It's people weren't looking for did they beat by a few pennies on EPS or a few $1 million on revenue or anything like that. The question was really the story. Who are going to put big money into want to make sure that they're going to get the whole picture. So my first question is, because I feel like a lot of times I'm guilty of this also, like I'm really just looking for that first move because more often than not, that's where the money's to be made. You said that you opened the press release, and especially you said that you opened the press release, and even though they typically guide CapEx and OpEx on their call, it was in this press release, but this was a one-off. It's not usually like that. So my question to you is, do you always open the press release? Because there's a cost to opening press release in terms of time and attention that could be looking at the box or headlines coming in like on that first. So do you always look at the piece? Is that like a strategy of yours, or did you just happen to do it this time? So okay. So now that we've gotten that first move, this is when I think like it becomes really interesting, because another thing that happened in that press release, there were two things. You called out the buyback, but another thing is in the last paragraph, I think Zuckerberg was quoted as saying this is going to be the year of efficiency, right? So between that and the buyback, the story kind of shifted completely from, has Zuckerberg lost his mind, to now all of a sudden we're talking about like the year of efficiency. Right. So this is something I learned from you, which is something that I'm like, typically when I see, like a long period of consolidation, my order flow brain goes to, well, if it's doing so much volume, in this range, then this must be the right price. Then this is where it's supposed to be. And in momentum trading, I think in sort of order flow trading, that's probably a fair way to think about it a lot of times. But when you're talking about momentum trading, what I've learned from you and Jeff Hall, I'll call out, and a few other really great momentum traders, is that's absolutely the wrong way to think about it, because you have to sort of flip the order flow on its face, which is you have this stock which came from 300 plus, went all the way down to below 100, and now is bouncing. And you have this situation where, Meta is just a huge cap name. If you're a momentum fund or a big cap fund or anything, and you have to own this when the story changes, if you get that consolidation following the earnings release and then it breaks out, it's all like this is my last chance to get this. Like I have like do it now, or I'm not going to get another chance. That consolidation is over. Does that make sense? Do you think about it that way? I've heard it from you. You say almost those exact words before, so I hope I didn't miss. Yeah, it must be nice. Yeah. Uh, Right. So this is like a walk back of what he did before. Like he got the message that this wasn't what, Wall Street wanted. But I wanted to just talk for another second about the expected value of that second move, because it seems like if you're going to read the press release and you want to get size and you want to check all your boxes, a lot of times you're going to need either that second leg or an extended move in order to really make money. I'd be willing to bet you're one of the best earnings traders in the firm. You're not going to say that. You're a humble guy, so I'm just going to say that on behalf of you. It's fine. So, but you need that second move. And a lot of people tend to think like, oh, how can I buy this like up 20 points? I'm chasing, or, I'm late, and so, they're inhibited to do that. But let me just I'm going to give a little bit of sort of wisdom, which I've learned from you and from other people, but just to, I'll give you a chance to comment on it. It's just this notion of expected value. Like, expected value is a pretty simple concept that people misunderstand or make too complicated, right? So you have that you're potentially going to make, that you're risking, the probability of the play, and then also how much size you can get, right? Something can go, 10 points, but if it goes 10 points on 1,000 shares at 5 o'clock in the morning, do I really care? Was I really, you know what I mean? Like, how much was I really going to trade of this, even if I traded it perfectly? Like, there just weren't any prints there. But so in the case of Meta on that first move, the risk is always that you don't have all the information, right? How many times have we seen, for example, I think we called this out before, like something like you have a great press release on an earnings stock shots up, but in the last paragraph you have, like CFO is leaving because of whatever reason, and then the stock references and gets clobbered, and you're stuck holding stock because you traded off the headline number. So whenever you're trading that first move, there's inherently that sort of risk, because first of all, you don't have the liquidity. It's very volatile. The risk is very big, especially if you're missing information, which is very possible, right? So from an expected value standpoint, you probably don't have the best liquidity. You definitely don't have all the information, so it's not really clear how much you're risking. You can get a good idea from reading the box and looking at the order flow. That extra piece of information comes out, and the entire box is going to evaporate, you're sure. So there's a lot of risk embedded in trading that first move. So even if you can make, people I think want to look at it and say, there's a 20-point move, and that's sort of this appealing, sexy thing that, oh, I can make 20 points. And the next move, not in this case, but in another case, might be 5 points or 7 points, let's say. And that might seem like less sexy or, less appealing, or just, it might not make as much sense. But from an expected value standpoint, if you can get a lot more size, really identify your risk, because like this case, you have that consolidation, right? And even if you're going to make, potentially fewer points, but on a lot more size, the EV is much better in that second story. And that's why if you're looking to maximize your EV, just looking at sort of that huge gap on a first move is probably not always the best plan. It's probably doing more what you're doing, which is looking to check those boxes and looking for a setup where you can sort of get size into a relatively, risk-reduced position that you believe in, like this one. Does that make sense? Yeah, and another thing, yeah, sure. Testing, testing. It's working. It's working. I could see. I mean, I can see. Okay. Yeah. Okay. Do you want me to you want me to look at the video? Yeah. Okay. Um, yeah, it works. Kent? All right. Can we keep going? And yeah, I'll hit recording. Let me just remember what I was talking about. Oh yeah, I got it. Okay. Okay. Um, okay. So, Lee, you there? Okay. Yeah. So I just wanted to sort of bring up one other thing because I think in order to make the trade that you're talking about, you know, you're a guy who likes to sort of trade around a core and add into positions and things like that. I tend not to do that, but that's a weakness. It's not a feature. So do you think that that's, you're being able to sort of hold that core from the first move and then maybe hold a little bit more within the consolidation because you think it'll ultimately break out, but not get so much that you have to sort of sweat the ticks? And then I presume you also buy more when it does break out. Do you think that that's sort of the best way to make this trade? Yeah, that would be ideal, but in reality, right, but if you think about that, what you're effectively describing is you're going to keep buying so long as the trend is intact, meaning you're staying with the trend until basically the trend breaks. That's the beauty of what you're describing. Now, obviously, it goes without saying, like, yeah, of course, everybody would like to get maxed out from flat and sell the top, right? That would be ideal. But in the real world, if you have all that stock and all the uncertainties that come along the way with the PR, then you know, you're going to end up just hitting the first down tick and not trading it correctly. It's very hard to just be able to zoom out unless you're sized sort of in an appropriate way, right? Well, one of the things I've learned from you and from seeing the way you trade is things have a tendency to go way further than you think initially. Not you, but just like in general, just things go further. Like I can't even tell you how many times I've seen like, oh, this looks extended, and then it goes another 50 or 100% just because I it's hard to sort of it's hard to sort of visualize how far something can sort of go. You know what I mean? Like, and just in my experience, things go further than I think they can all the time. So, it's a really good idea to sort of get in the habit of saying to yourself when you're putting a price target in mind of where something can go, if you have a tendency to underestimate that, you should incorporate that into sort of your price targets. You know what I mean? Yeah, well, I really hope everybody listens to this. This is a great trade to discuss. I hope everybody listens and learns from this trade because you and maybe a handful of other traders are the masters at this trade. At least for somebody like me, it tends to run sort of counterintuitive to the way I sort of visualize order flow and, things like consolidation and a second move. Just um, the only way I've been able to do it is by learning from people like you and Jeff and a handful of other really talented momentum traders. I hope everyone really sort of digs into this one, listens to it a couple of times, and gets a big benefit out of it. Um, all right, are we good, Kent? Okay, stopped recording. Also, my headphones just died, so look at that. We just crushed it. Hello? Hold on. Are we good? You want me to just upload the video? Okay. I'm stopping the stream, okay? It should be two videos, correct? All right. All right, I should stop the stream though, right?